And good evening. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 and the Nasdaq 100, and being recorded on Saturday, September the 30th, 2023. I hope everyone is having a really great weekend, and all of the happenings that are happening within the country and around the world aren't necessarily affecting us, and that we're able to get some relaxation and to be prepared for what I believe is going to be continuation that should provide us some great trading opportunities. I'm going to start here on the S&P 500. I'm going to start with the cash market. And I'm actually starting on the daily chart instead of going out to the weekly because there are no really changes to make. And I have put in place all of our Fibonacci extensions that are going to cover us for the primary C wave, which we are now involved in. And so far, I remain looking at the intermediate first wave down within this primary C wave, which will consist of 5 waves of intermediate degree. And the first thing that comes to mind is like, am I counting too small? Or are we really forming the larger intermediate degree and looking for deeper levels that would fit more with an intermediate degree move versus along with the primary degree? So in other words, when I look at my bigger picture, like these outside here, these fib numbers, this is actually for the entire supercycle wave 3. And I can quickly just show you, if I go to my maximum monthly chart, you can see it really are fibs, retracements that are drawn from the begin at that low in 1932 to the high in 2022. So when I drop it back down and we go back down to that daily chart, what we're looking at is the 0.236 retracement of that 90-year rally is 3682. The 382, which is common, again, a common level, is 2980. And that's the one where I'm looking at where likely primary wave C may bottom. But then I have additional coming in where primary C would be 1.618 of primary A at 2475, and 50% of that larger supercycle wave 3, a 50% retracement would be 2411. So again, when we're looking at this on this level and we're looking at it in the big picture, what I'm actually looking for this entire move, right, this supercycle fourth wave. Now, again, just going back out to the maximum chart, the maximum time, we really are likely going to be heading into this level, the previous fourth wave of 1 lesser degree. I'm in a supercycle wave 4, 1 lesser degree is cycle. And that price territory is 1582 down to 1672. Now, mind you, 672, and actually was a little bit lower, 667, took place in 2009. So it's not like we're going way back here for like, into the 80s or beyond. We're still within this millennium. So it's not such a far stretch. What becomes a far stretch is realizing what could possibly happen that would create a situation that would drive the market ultimately down to those lows. Now, mind you, those lows in 2009 was due to a financial economic collapse. And it started with mortgages, if we remember correctly. And then what happened is we saw bank failures. Then we saw Bear Stearns go out of business. Lehman Brothers go out of business. We saw many things start to happen. We saw markets just get destroyed. We saw where they went after individual banks, the thing of that's going to be next, it's going to go, where they went after big, large corporations. And then what happened and propelled the market up and out of this was not only that the federal government stepped in and started providing interest-free loans to get corporations back up on their feet, to restart the banking system, to get things going. But it was getting down there. And a lot of it was by big, huge trading firms and everybody else shorting. And for example, I can remember sitting one day and I was just watching Ford Motor Company, which actually, everybody was in trouble and things were going to move. People didn't have any money to buy cars and money wasn't available and banks were coughing up themselves, So the thought of cars and all this inventory, et cetera, really just kind of overtook, and they were pounding General Motors. They were pounding Ford. Ford was trading down at $1.50. And I remember thinking, it's like, even if it got down where Ford decided, okay, that's it, we're declaring bankruptcy, and all of their assets, their liquidatable assets, which have been all of the factories, all of the where they built the cars, all of the real estate, had to be worth more than $1.50 a share. And so that's where things got turned, because it just got overdone, it got overcooked, and it just got blown out of really with what was happening, because the thought was like, nothing's going to recover. And so that's when the government stepped in and actually just started printing money and handing out stimulus, first to corporations. And that was to keep us all in jobs. And thus, we went from 2009, over 13 years, to 2022, and the market increased dramatically on a low interest rate. So I've talked so many times, and that really, in my view, what is happening is that we're going to be correcting all of that excess money that was placed into the market during this period of time, this low interest rate environment. And then the stimulus that got put in after COVID knocked the market just on its heels, stopped it, dropped it in 3 weeks. It was an amazing period of time to be in the market trading, because your eyes just got the size of saucers, because you're like, oh my God, I can't believe how they're really hitting this. And what then happened was, of course, the government, the Treasury, the Fed had to come in and bail out us, retail, us, the common folk, because we needed money to live, or the economy truly was gone. If we weren't able to buy food, if we weren't able to pay rent, if we weren't able to do anything that has to deal with money, that was it. It was all going to go. And that's how hard they were hitting it. Boom, get the stimulus going, put the stimulus out there, and everything changed yet again. Then watch interest rates literally go to zero and be held there. So what we're going through now is the fact that we had a zero interest rate policy for way too long. And the Fed's now backed into a corner because, and they talk about how they raised interest rates, and it truly is from where as low as they were to where they are. It's a huge percentage that the rates have been raised, and the largest accordingly. But the thing is, it's like, well, you held it too low. You held it at zero for way too long. Now you got to clean it all up, because no one wants to borrow or to lend money at that interest rate. So many things have changed. And when I look at the equity markets and I look at what really needs to take place, it gets very interesting. Because in my view, we still have an incredible overvaluation and how we're evaluating the U.S. corporations. And that has to do with how much money is available and still floating around. So when this all starts to come undone, and it likely will come undone in the balance of this primary C to put in a cycle A wave, then we're going to get a cycle B wave, which is going to be like the relief of the relief of the relief. So I don't think we really start to totally fall apart as we did via COVID, that type of downward, just absolute pounding, or what we saw in 2008, 2009. That, I believe, will happen again. And it will likely be of the same intensity as 2008, 2009, because that was a cycle degree. And I'd be looking for another cycle degree C wave. Let me go out and just take a look at it one more time for you. I'd be looking at this right here. It doesn't look like much, but the market went from 1598 to 667. So again, yes, we're basically going from, if we had to do in the percentages, right? If we take and you just do the percentage as to how deep that market dropped, how far the Nasdaq fell, how far the S&P fell in 3 weeks from a high at, let me get right to it, at a high of 33.93 to a low of 21.91. So, and that was like boom in 3 weeks. So, 38%, 40% in 3 weeks. Well, and this was 15, let me just get right to it, 1576 down to 6, this is more than 50%. This is like, I think it was like 75 to 87% of market value disappeared. So what would that create if we went and had to go through another one of those? So in other words, let's just say the high 48.18, because we're in the cash market. If now we're talking technical, right? So I'm not just saying, this, I'm making this up. But if we had to compare decline to decline, and now that we're up here, well, it's 48.18. And then let's just say 85%. That's 4,000 points. We're back down to 6,000, or excuse me, 600. But even if we're saying 48.18 and it's going to be 75%, that's 3,613 points that we drop from here. And where do you think that's going to be? Let's just kind of scoot this over. Look at this. Do we have the numbers? We do. And on the super cycle level, it's not even 100%. It's 78.6. 618 is 1843. That works, to be honest with you. That fits. So does 1158, which is where primary C would be 2.618 times primary wave A. So we can get there technically, right? Now, what we're talking here, we're talking the technical picture, right? So let me just straighten that out. So again, we're in the beginning stages. And we're just dropping and finishing an cycle A wave. Then we get that cycle B wave, which will be a kick butt rally. So I think it will be in cycle wave C that the majority, the biggest piece of the damage, not only to the economy, but to the global economies, will take place. And I can't say, oh, this is going to cause it, this is going to cause it, that's going to cause it. I'm just telling you, this is what the pattern that's going to be in play is showing. It's giving you those possibilities. It's giving you that potential of what the market could do. It is not going to tell you, oh yeah, because this is going to happen, that's going to happen, and this is going to happen. If we would have known in 2009, oh gee, these mortgages that they got handed out like candy, to people that really didn't qualify were going to go bust, and that Bear Stearns was going to give it up, and that Lehman Brothers was going to give it up and just close the doors and just be gone overnight. Don't forget the day before Bear Stearns just collapsed and went to nothing, it was trading at $109. Out of business. Lehman Brothers, overnight, out of business. So things happen, and it turns into a surprise. And that's when we said we get panicked. Now, bring it all back into today. I'm looking for additional strong downside. What do we have recently that could possibly do that? Well, we had a Fed who decided to kind of correct a little bit of what they said coming into 2023 on how many interest rate hikes we were going to get and where that was going to happen. And basically, there was this thought that in October of 2022, at that low, well, things are under control. Inflation, we got it. And they produced this B-wave rally. Trust me, folks, there's going to be another B-wave rally. It's not going to be primary degree. It's going to be cycle degree. And we're going to have the same conversation. Oh, yeah. Inflation done, gone, boom, boom. Because everyone's going to have to come running back in. So it's not necessarily that truth is going to be told. It's just like, this is the wave that's going to be there. So, and it's a B wave, and it's going to be a counter trend rally. And it's going to be strong because of the size, because of the degree of what we're looking at. So these are what we get to look forward to. Now, instead of going like, well, the world's coming to an end or whatever, I prefer to focus on the trading. Where's my opportunity? Because things will continue to trade. And I'm expecting that even, we may go through some slow period when we get into that B wave, but because it does kind of go with it. But the A and the C wave, there's going to be a lot of changing of hands, just like we saw this past week at the end of the quarter. And if you were really looking at interest rate at the treasuries, big amounts of volume traded. After really just kind of falling and not doing much on lower volume, suddenly everybody's going to have to make a switch as they prepare for the fourth quarter, as they prepare for moving forward. And now we're doing that same thing. And now we're supposedly everything's in place where everyone's going to be happy with what they have going into the fourth quarter based on their expectations, what their models are telling them the fourth quarter should present. Well, if the Fed is truly going to be hanging on and saying that, well, we got more interest rate hikes to come, we actually don't have as much control over inflation, and we are going to have to continue to raise interest rates in 2024. Well, I'm going to say we're going to get that B wave rally anyway, but maybe cycle wave A doesn't bottom until first quarter of 2024. Again, I don't know, but I can kind of put it out there. We're in a primary wave C. Primary wave A didn't really take that long. Primary wave A took 9 months. Primary wave B took 9 months. And that 9 months, we topped out in July. So August, September, October, November, December, January, February, March, April. So we're already looking April of 2024 before primary C bottoms. So we got a lot to do, even time-wise. We're just entering October. So again, with the switch, with the prep, with everything else that's going on, I would expect that we're going to continue to fall. We're going to continue to go down. And now that we've got everything in play, now I think we're ready to resume. So if we're following the pattern, we are finishing up, and I believe we did finish up on Friday, a minute fourth wave, and that's within the minor third wave coming down. So we're getting ready to put in a minute fifth wave. Now, that being the case, here we have an initial, fib extensions for wave 3. All that's left out of this particular extension is 2.618, and that's 42.22. I'm going to round it up. That's where that level is. Right underneath it is the daily 200 EMA, which is at 42.21. The SMA is at 41.99. My thought process is it's going to get broken, and the other will get broken, and as it did here on the 50s, ba-boom, will gap, and we'll just head lower. And so minor wave 3 then comes in at 4,100, or possibly even lower. Now, we can add another here, and we're going to be putting in extensions for minute 5. Now, remember, we're in the cash market right now. So if I'm going to put this in, I'm going to put this down, and now I'm going to show you. The most common, when we're looking at Fibonacci relationships between a fifth wave and a first wave, is equality, that wave 5 will equal wave 1. Well, that's right there. That's right there at that 2.618. And right there at the daily 200 EMA at 42.22, actually. It sits right there. Now, a break there takes us to the next most common, where wave 5 would be 1.618. In fact, this one, we already know it's got to come below there. So but we're going to find some support there. Again, 42.69, 42.64. There's likely going to be some support. Just because it's there, just because it's a fib, I do not believe it holds. Because there, we got to get below 42. What was that low on the cash? 42.38. Wave 3 will be broken in by wave 5. So we're already sitting at 42.22, and I don't think that's going to hold it. So the third wave, the minor third wave, also has to look. So the minute third, 42.22. I think kind of, if we break these levels, I think we drop quickly to 41.53. Maybe that completes minute 5 and then completes minor. But in actuality, I think this comes into play, where minor 3, 1.618. Again, the 1.618 and the minute 5 could, it could have something to say. They're not that far away from one another. But, so we got a zone building. And the zone actually is 41.54.55 to 4,100 to 40.45.50. So that's our zone. And because you're like, well, there's a lot of space in between, it's because the market needs to fill all those spaces. This is a large part of and a finishing move for the minor third wave. Now, what we get out of that after is a minor fourth wave. So again, we should have some upside. And you know what? That's when I think we start moving into the earnings. So that pre-earnings, we're still going to be adjusting. Then we're going into the earnings cycle. Boom. And that's mid-October. We start to rally back up. But then again, after minor 4, we have a minor 5. And while we're back out, so 3 will be done, but now we're back out to the C wave, to the primary C wave, because I don't have additional fibs that I can stick on here until we get the 3 in and the 4, and then I can do a minor 5th wave as compared to minor 1, but I don't have the points yet. So what do? We look at it here. What's our potential? Well, primary wave C would equal 0.618 of primary wave A, which is like, nah, I see this more. But it should find support there at 37.92. Well, guess what? Now that can get attached. That could get attached to intermediate wave 1. Then we get immediate wave 2. Then we drop again, stronger. Slide through that. And now primary C, 32.89. Intermediate wave 3. Then we get an intermediate wave 4. Now we're working through an intermediate wave 5. And guess what? 29.80. Possibly as low as 2,500. But see how they start to come in as you build your picture as to what is coming up. why I booted all the fibs out there, so that I start to get an idea of what should this all start to look like as we come off. Now, so again, bringing it back up to next week, I think we're going to come down in the fifth, and I do think that we likely are going to break. It might not happen right away, but I think there will be a push and something will drive it lower and will break these two levels. Don't forget, we're not out of the woods. They're over there. They still have to have this vote about, do we shut down or we not shut down? Are they going to accept this stopgap that the House came up with? Or is the Senate going to be like, you know what? No, we really don't like it. No, not going to do it. And so, or even if they do accept it, and we get to fund the government for another 45 days, that's not a whole lot of time when you really think about it. So they give us 45 days and says, we're just into November. So we got to go do this again? Now we're going to have this an additional argument, and it's going to be surrounded by, well, you're not doing enough budget cuts or whatever. All based on, the House of Representatives, who knows? So all of that remains out there, folks. There's still so much swirling around. And if you think you're going to go find something, oh, this is bullish, that's bullish, God bless you. You may have the upside move, but I'm not going to fall in love with either side. I'm going to play my price action. So again, how you trade and what your time frame is going to get tricky, because I think the moves will be pretty intense. So anyway, I am continuing to look for the downside. We got enough there to drive it. And then again, just looking for the stepping, the stair stepping. 3, 4, 5, then we got minor 3, then we got minor 4 and 5 to complete intermediate wave 1. And I definitely think we can be down into here. And then we rally in intermediate wave 2, we come down in intermediate wave 3, and then we go from there. So you can see we have all these levels. Don't forget, you got to rally back up, and then you rally, and then you fall back down. Right? Maybe this is where, but I think that primary C comes in greater than 1%, 100%. Now we're down into here. So is this going to be intermediate wave 1, rally back up, intermediate wave 2, somewhere in here, rally back up, intermediate wave 4, and then intermediate wave 5 to finish cycle right there. That's what I'm looking at. All right, so let's just go over and take a look at the this was the cash market for those that base their trades on the cash market. Here again, we're in got the same position, except of course we got a little bit cleaner in terms, because this continues to trade once the cash market shuts or they're done, and now we still do this. So here we are in the futures market. We're still working on that primary C wave down. We're still working within it on the minor third wave down, but I believe we're getting ready to kick off and start minute wave 5. In fact, I think minute wave 5 is actually in progress now. I think 4 topped at the highs at 43.68, close enough to that 43.80 high, or actually it was 43.87, I think it was. 82, what was this one? 83, so 43.87. The fib resistance is at 43.87. So all things said and done, I think we are finished, and we declined pretty strongly off of that. They bought it back up into the close. Yeah, God bless them. And now we'll see what happens. I think we come back down, and you look at where we finished daily. Look at where we finished. We broke below the 200s both on last Wednesday. Thursday, we got back above them. Friday, dipped below, touched the SMA, and roared back up, and then came back down. Actually, this was on the return trip down. And I was thinking if it needed to break 43.03, right. So this was Thursday, rallied, Friday, rallied, came back down, did not break 03, which would have set another landslide, but then rallied back up to finish just above that 200, daily 200 EMA. I think that kind of gets broken. Now I'm going to bring this down. Let's take a look at our 4-hour chart. Again, we're trading the future. That's what we trade. Look at that. pretty strong. Right, ABC, clean, nice, bam. Rally back up because got to have that close. We're already below everything, right? There's the 200, the 100, the 50s, the 20, the 4 and the 8, all hooking and heading down. So definitively, we should be breaking below 42.77, which is the current low for minute wave 3. I can add to this, and again, we're going to be talking about minute 5. 100%, 42.58. That's equality. That's number one. That's where the list sits. So if it gets down to 42.58 and we hold, then that could complete minor wave 3. Now, what we have going on is the 100% for minor 3 that's already been taken out. So our next level would be 1.618. I can put that back and we'll show you where it sits. 43.13. We're back above it, but we did break it. So considering that wave 5 should break below wave 3, I took it off. So, but just so you know, it actually is a level still there, and it may still provide some support. But as far as it being legit in terms of completing the third wave, the minor third wave, no. So I'll be looking for it to come below. Next one for that is 41.37. So you can see we got a lot of space. And then what we also have in here, oh, I wanted to do that. There we go. So we're coming off 100% there, 618. What is this secondary? I got 1.61. This is a 618. I'm not really, what is this one? 45.98. That's all the way up here. That's kind of a weird place for that to be. That's a minor third. Interesting. Interesting. Let me see what happens if I take that. Yeah, that was interesting because here it is for minor 3. I'm not sure why that was sitting there. Okay, so what we have is 618, so 100%. These are weird that this is showing up here. I want to see who this one belongs to. 46.84. That's way up there. That's up to here. And that's a weird one. Now let me go over here and say edit the properties. Take it out. And now I got the 100 down here. Again, that's going to be playing that outside. Oh, here. It's for the minor. That's weird. Okay, that's got to be taken out because it's not correct. Somehow I was doing a minor. So those were wrong. My apologies. All right, let's start back again. So on the 4-hour chart, what we're looking at is for minute wave 5, equality 42.58. And I think we got, let me put back here now, 1.618. We have 41.88, then 41.37, which matches up to minor 3. Okay. And so that's a zone. And a zone actually goes 41.88, 41.37, 45, 40.75. That's our zone that I'm looking at for minute 5. More likely into here. This is pretty clean. And we already know that minor 3 would be greater than 100% of minor 1. This would be next common, but anywhere beyond this, super nice and clean. So that's our zone. I'm looking for that, looking for the minor 3, and then we get a rally. So I don't think we got like a great deal. I mean, yeah, I mean, we're sitting up at 43. So if we got it to drop down to here, it's going to be 150 points. But Nasdaq can do that pretty quick. excuse me, S&P can do that pretty quick. So again, still looking for some downside. At least it's got to get below there, and I would think it's got to get below there. All right, so over in, let's go back and let's take a look now at the NDX. Both are actually, they're still following patterns, so there's nothing different about them, except of course the levels for their trading. So here in the Nasdaq and the NDX, we have the same pattern in play. And I've got my levels correct. Okay, good. So right now we've got, this is the top of, let me just pull that back in. Primary wave B, so we're in the primary C wave, and we have minor wave 1, and we're in intermediate wave, primary C, but intermediate wave 1 of primary C. So there's minor 1, minor 2. We're working on minor 3, of which we have 1, 2, and 3 done. 4 completed on Friday. Got up there in the cash to a level that it was, I think, 50%. So touched it, ABC, looking for it to come back down, finished lower. And so what we have is the quick for the minute 5. Minute 5, I believe, is going to come all the way down to here. 100% barely takes us to a new low, 14,422. And then we have 618 to a larger move at 14,349. Not going to be controlling, but may provide support. The minor third is 100% at 14,244. And then 1.618 for minute wave 5, 14,125. So the zone is 4421 down to 14,125. 14,422 to 14,125. Outside, yes. I expect wave 3 to do more than 100%. So I'm going to be looking for here. Possibly Nasdaq gets really smacked harder and it comes down below here. 1.618 would be a pretty hard sell. The Nasdaq could get a pretty hard sell. Is it possible? Yeah, it is actually. So technically, that's what we're looking at. Technical picture. Is it possible? Yeah, it is. We've seen it. And that would be next up after it breaks here. Again, I always like to get a little bit of cushion in there, having the third wave as the longest wave against wave 1, moving forward as we get ready, to do a 5th wave at some point. So that all is pretty normal. Now, let me just take a look at the daily, because we had some things on the daily chart. Here, it's, yeah, it kind of comes down and starts to break. If it breaks that, it's holding on to the daily 4, holding on for dear life. It produces a very negative type of a pattern. We could see it slide pretty quickly down here. And the next up would be the 200. The daily 200, which is sitting at 13,866. So these are not out of the picture, because I remember the minor wave 3, the 618 is 13,395. So there is at still breaking the 14,000 mark. And then we have that at 13,866. And then we have the SMA at 13,557, all within the realm of reality on the way down, providing some support along with that. So again, cash market, looking for additional downside. Finish up the minute 5 and the minor 3rd, setting the stage for a minor 4th wave. Over in the Nasdaq, boy, wild and woolly in this time period last week. Oh, word. Because of all the rotation out of one into the other. Well, what are we doing? Well, we're moving back into AI. Oh, okay, we're going after NVIDIA. We're going after AMD. We're going after Microsoft. We're going, et cetera. Oh, we love Apple. Okay. Then we get Friday's expiration itself. What level did we want to see? And boy, at the end of the day, did they really just make some funny, dunny moves. Or suddenly just like somebody came in and they just bought Apple, just said had to need a huge amount of Apple. Boom, stock runs 78, 70, 80 cents, maybe even it was $1, and then immediately just reversed right back out of it. You're like, oh my God, this is like incredible. And so we saw that in the future. Same story, primary C wave coming down, and we've got minor wave 1, minor wave 2. Again, just in all fairness, I didn't actually review the big picture, but if I'm going to come out here, let me go one more. Let's go look at my weekly. We got a lot. We got a lot for this thing to be coming down. Now, on the weekly chart, it did break the weekly 20 and shoved it all the way down to 14,557. Actually, it was, 586. And that was on the 25th of September. And then, boom, took it all back. But look what we got. Big old nasty cross. Right? And ended up closing at the week prior's low. So a lot going on. I think it can go very quickly. I think it can go ding, 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 and just be done. 100%, 14,396. 618 for the minute 5, 14,245. Then we've got the weekly 50 sitting at 13,892. And then just below that, we have a level and an area. 400 flat. I mean, the 100 flat is a pancake right here. That's going to give us support. If it stays flat, it's support. Right? Weekly, we still have rising 200, so basically cresting, but still rising, but the 100 flat. 50s, finishing up, starting to go flat. That kind of tells me it's going to be support and maybe enough to put in a low for minute 5 and minor 3. So let's bring those down. Those are just moving average wise. Let's take a look at the daily. On the daily chart, we have that 4. Then we got the 200, the 200 daily 200, 14,245. Good place to stop. Puts the minor 3 in an area where it's like, yeah, you give me that extra cushion. I like it. I want 1 to be the shortest. Wave 3 does not necessarily have to be the longest, but it cannot be the shortest. So I like that cushion. And then we have a whole zone again. 14,245, 14, or actually then we break 13,972, 742, and then down here at the bottom, 13,500. Eventually, yes, I'm looking for intermediate wave 1, right? This is the C wave, possibly, maybe finish down in here, down to here, and then we bounce up in an intermediate wave 2, come back down to intermediate wave 3. Maybe that brings us down into 12,004. We get an intermediate wave 4, intermediate wave 5, bingo. We're still looking at sub. So this is, don't pay attention. We're not going to a negative number. We can't. So we have all that there. And then that could be cycle wave A. Then we get a cycle B wave. So yes, Nasdaq, there's so many overvalued stocks, in my opinion, that have to. I mean, I think this earnings cycle, we will again start to see how higher interest rates are now biting at corporate. We already know how they're biting at us. We're living it. But now how's corporate going to do? And so we start to see how it's just chipping away at it. And that'll start to bring the market back into line with proper evaluations. So anyway, I'm going to wrap it up here. Bringing this down, we'll take a quick look at the 4-hour. And again, nice A, B, C. And this was the A wave, and it was a small little B wave. But otherwise, it just, see this, and I'll tell you why you've got to do it that way. We look at this, right? We have ABC, and if that was A, B, C, A, or if this was A, B, and this is the C wave, that's 1, 2, 3, this would be 4. Hold on. No, it's not. 4 cannot overlap and close below wave 1, and that's what it's doing. into the price territory of 1. So that's why it went A, B, C. Okay, so just so you know how that came about. And now we've already drove well below it. And ultimately, minute wave 5 should break below 14,583. We have 57, the first stop on 100%, right? That's equality. 1.618 next up, 14,245. And boy, that sits much cleaner with me. And we know that the Nasdaq, it should be big. You're there. Get another couple of really good slides. Lots of things still out there that can cause that. I'm going to wrap it up right here. I want to thank you. And again, depending on how the market opens tomorrow for Globex on Sunday, this may all just roll into Monday. And so the next Elliott Wave update maybe tomorrow. So we'll see how it opens. If it's going to open really strong in one direction or the other, then I will come on and I'll try to make an update. Otherwise, then the next Elliott Wave update would be on Monday, October the 2nd. So have a great balance of the weekend. Try to relax, try not to get too excited about what's happening around us, and catch you all on the other side on Monday.